Welcome to Audit College. In our last video, we learned how to prepare a trial balance. Now, our next step is to prepare the final account, which include the trading account, profit and loss account, and balance sheet. These statements helps to know how much profit or loss the business has made and what is the financial position of the business at the end of the year. What are final accounts? Final accounts are the last step of the accounting process. They are prepared at the end of an accounting year to find out gross profit or gross loss, net profit or net loss, and final position of the business. First step is trading account. The process is to find out gross profit or gross loss made from buying and selling goods. Format of trading account. Particular debt amount, particular credit amount. In the debt side, all direct expenses related to goods are shown like opening stock, purchases, wages, carriage inwards, etc. In the credit side, sales and closing stocks are recorded. If the credit side is greater, gross profit. If the debit side is greater, gross loss. For example, given data, in trading account, opening stock, debit side 10,000 rupees. Purchases, debit side 25,000. Wages, debit side 5,000. Sales, credit side 50,000. Closing stock, credit side 12,000. The result is gross profit 12,000. And next step is profit and loss account. The process is to find out net profit or net loss of the business after including indirect expenses and incomes. Format of profit and loss account. Particular amount, debit and credit side. In the debit side, all indirect expenses like rent, salary, depreciations, advertisements, etc. In the credit side, indirect incomes like commission, discount received, interest received, etc. If the credit side is more, net profit. If the debit side is more, net loss. For example, based on the previous data, gross profit, credit side 12,000, rent debit side 3,000, salary debit side 4,000, commission received credit side 2,000, and the result is net profit 7,000 in debit side. And the last step is balance sheet. The process is to show the final position of the business, its asset and liability on the particular data. Format of the balance sheet. Liability amount, asset amount. In the liability side, all amounts the business owns like capital, creditor, outstanding expenses, etc. In the asset side, all amount the business owns, cash, furniture, stocks, debtors, etc. Both sides of the balance sheet must tallied. That means your books are arithmetically correct. Example sum based on the previous data. Balance sheet as on 13 June 2025. Liability amount, asset amount, capital is liability side 80,000 and add the net profit 7,000 and then less the drawings 6,000 and adjusted the capital amount is 81,000 and then creditor is 8,000 and the asset side cash asset side 38,000, bank asset side 27,000, furniture is asset side 10,000, closing stock asset side 12,000, and then tally the account 89,000. In balance sheet is tallied. If you have any doubt or question, feel free to comment below. So that's how we prepare our final accounts. Thank you all.